President Trump wants to fire Federal Reserve Chairman Powell, but can he even do it, and will it even help? We'll discuss in a minute. Mortgage rates are coming back down to earth this week, and even with all the chaos of the last few weeks, we still had more than 18% more people apply for mortgages this week compared to last year. Nationally, pending contracts, new listings, and inventory all saw an increase this week, and here in our local markets, both Dallas and Collin counties both saw a huge jump in pending sales, and our median housing prices continued up this week as well. We're covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas-Fort Worth area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is April 21st. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to get to the latest weekly market update. Okay, starting with market news. The chairman of the Federal Reserve, Jerome Powell, gave some remarks at the Economic Club in Chicago on Wednesday that did not make the president very happy. In his speech, he said, and I quote, "For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance." He also pointed out that with trade wars, supply chains can be significantly disrupted and lead to prolonged inflation. In other words, if we get a big decrease of supply from some of our imports, thanks to these tariffs, then it makes sense that if demand remains about the same, then prices would have to go up, causing more inflation. So if these supply shortages do happen, it would worsen the economy. These trade wars are expected to increase prices of some things. We just don't yet know which things or by how much. So a big part of Trump winning with these tariffs is he has to find a way to offset this coming increase of costs for the American people, and the quickest way to do that is by the Fed cutting rates. And this isn't just so mortgage rates will come down, it also will allow businesses to borrow more cheap money to continue growing and ultimately employing more people. Plus, a big part of these tariffs is Trump wants more things manufactured here in America, and that takes a lot of money to do, which businesses will only be able to do if they can borrow the money cheaper than where it's at now. It's very hard for an economy to grow when the cost of borrowing money is this high. So Trump is going to need some help from the Fed to offset the result of these tariffs, and instead what he's getting from Powell is, we're just going to keep rates high and see what happens. But Powell is not the only Fed governor with an opinion. One of the other Fed governors said last week, and I'm quoting, "If the tariff-induced slowdown is significant and threatens a recession, I would expect to favor cutting sooner and faster than previously thought. With a rapidly slowing economy, even if inflation is running well above 2%, I expect the risk of recession would outweigh the risk of escalating inflation, especially if the effects on tariffs in raising inflation are expected to be short-lived." So you have to remember, Chairman Powell is not the one who decides the federal funds rate. It's the FOMC, which is a whole committee. So while Powell seems to be saying, let's just stay the course and see what happens, Waller appears to be saying, if it looks like we're going to head into recession, I don't really care what inflation looks like. I'm going to be voting to cut rates hard and fast. Which brings us to the next point of, can Trump even fire Powell, and would it even make a difference if he did? As of today, the president does not have unilateral authority to fire the Federal Reserve Chair. Under current law, the Fed chair can only be removed for cause, which typically means serious misconduct, not policy disagreements. But if you ask me, this sounds like a super gray area. And if all else fails, Trump can always just use the same line that every president uses to get their way: national security. But in any event, there is already a Supreme Court case pending right now about how much power the president has to fire heads of independent federal agencies like the Federal Reserve. And according to my friend ChatGPT, pending in this case means the case is active, arguments have already either been heard or are scheduled to be heard, and a ruling on this is expected to be issued by June of this year, so within the next 2 months. So, can Trump fire Powell? Technically no, but citing national security, maybe, and pending this Supreme Court ruling, there's a chance it changes to yes. But if he fires Powell, will it make a difference? Remember, the federal funds rate is not decided by Powell. In fact, he is just one vote out of 12. Just one of 12. The FOMC is made up of 7 governing members, of which Powell is one, and then an additional 5 of the 12 regional Fed presidents. And those 5 are rotated in and out, and they also get a vote. So again, of 12 votes, Powell is just one. So technically, when it comes to the federal funds rate, Powell does not have nearly as big of a role as people seem to think. However, the one thing the Fed chair does have is temporary influence over the global markets. And this is what Trump needs right now. Every time Powell comes out and speaks, markets move. Wall Street, the bond markets, the central banks, they all hang on every word of the Fed chairman. If Powell had come out last week saying the things that Waller actually said about how if it looks like a recession is coming, we're going to cut rates hard and fast no matter what inflation looks like, then the global markets would have taken a sigh of relief and we would have seen the 10-year and mortgage rates drop, even though nothing would have actually changed. It's just the perception of if things go bad, the Fed is going to cut rates. Just that perception alone would have moved markets in a positive direction, which would have been in Trump's favor. And this is why Trump needs a new Fed chairman. There's a lot of fear surrounding these tariffs and the trade wars, and Trump needs someone in there who's going to say, don't worry guys, if things start going south, we're going to cut rates big time. But again, that perception only really helps in the short term. In the long term, what actually ends up happening is going to be up to all 12 members of the FOMC. So short term it matters, long term not really. Okay, moving on, starting with national housing inventory. This week we had an increase of 16,966 more homes for sale in the country. And this actually drops us down 1% to just 32% more inventory than we had last year, to a total of 719,400 homes available for sale in the country. This same week last year, inventory was only at 542,651. Look at how far we've come from last year's line. So we are way better off than last year and getting much closer to being a normal market. And for reference, the all-time inventory bottom we had in 2022, we had 240,000 homes for sale. The peak of last year, we had 739,000 homes for sale. And this same week in 2015, we had about 1.06 million homes for sale. Now looking at new listings, this week we only had a very small increase. We only have 774 more new listings than we did last week, although we're still doing incredible compared to the previous 3 years. We are blowing all of those numbers out of the water, and this is great news. More and more people are listing their homes again, which means more inventory for you to choose from and less chance of prices running up quickly once rates finally do drop again. So that was 77,004 new homes listed this week. Now looking at pending sales, something interesting I noted last week is that in all of these other years, home sales over the last few weeks either went flat or even down. And this year they just kept going straight up. And right now we actually have 1.8% more sales pending than we had last year nationally. And all you need to know is overall we should continue trending up until late May or early June. But this week we have 391,488 homes pending in the country, which is about 6,874 more than we had last week. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we had a small increase. We've been stuck at 35 the last several weeks. This week we went to 35.5% of homes took a price cut before selling. Last year we got as high as 39.9%, the year before 39.2%, and then in 2022, when rates first went straight up to 8%, we got as high as 43.2%. But just so you know, if you want home prices to come down, this number will need to be going up. And actually, it looks like we're following very close to last year's trajectory, even though we started out higher this year. So I would expect it to peak somewhere around the same, somewhere in August, looks like. Okay, now moving on to mortgage rates. So we started last week at a 6.98. We got as low as a 6.86. And Friday we ended at 8.7, but just now on Monday, the numbers just printed and we opened up quite a bit higher at a 6.94 again. So you can see that jump up here. That's just today, Monday. But even so, we are still, even with that jump, with this last run up, we're still 0.5% lower mortgage rates than we had last year. We're at 6.94. This same day last year, we were at 7.44. So we're still doing much better. Then regarding mortgage purchase applications, this week we saw a decrease, but you'll see we also saw a decrease in the corresponding week last year. This was a holiday week again. Things always get skewed on holiday weeks. So even though we had a decline, because we had one the same week last year, we are still 18.4% year-over-year increase in the number of people applying for mortgages this week, which is, I believe last week was 18.6%. So almost the exact same increase of number of people, even though we had a big drop this week. And this gives us 8 straight weeks of positive year-over-year growth. But I've been saying it for more than a year now. There's no reason to believe mortgage demand is going to grow significantly with rates anywhere near this high. The real demand is going to come in once rates get to and stay below a 6%. The evidence we have for that is new construction has been offering that, and they still are, and they're selling much more efficiently than pre-existing homes. So this number is not going to get way up here to a normal levels, not until we get at or below 6%. Okay, now moving on to the local markets, starting with the MLS data here in Dallas County. This week, we had 605 new listings, which is 116 less than last week. We had 318 closings, which is 37 more than last week. Of those closings, 70 were immediate sales, meaning they contracted within the first week. That's 11 more than the previous week. We had 344 new contracts, that's 30 less than last week, and in total, we have 2,488 homes either under contract or pending. That's 60 more than last week. So the big news here is we had a big drop in new listings, at least in Dallas County. Now moving on to Collin County, we had 499 new listings. Again, a big drop in Collin County as well, which is different than what we saw in the national market where things continued up. So that's 95 less than we had last week. We had 233 closings, that's 16 more than last week. We had 61 immediate sales, that's 5 more than the previous week. We had 234 new contracts this week, which is 15 more than last week. In total, there are 2,129 homes either under contract or pending, and that's 61 more than last week. Okay, so I have no idea what just happened, but my video has disappeared, so you're not going to see me for this next part, but we're moving on to the Market Action Index. Starting with Dallas County, if you've never seen this, it takes into account all of this data, puts it into one easy to read graphic with a number. 30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market are we in? We are still at a 38 slight seller's advantage, and you can see no real change this week. We went up by 0.2, which I would say is just flat. And you can see things were heating up pretty nicely until all of the trade wars uncertainty started. And so for the last, well, it's only been 2 weeks really, that things have gotten a little lower. But even so, the median list price is continuing to climb. That's the highest this year at a $415,000 here in Dallas County. Median price of new listings as well as remaining at the very top of the range. Average days on market is continuing to drop, 2 more days down. Median is remaining at 49. Inventory is continuing its same steady climb up. And then of course, we just said the Market Action Index remains at 38, which really 38.28 to 37.62. This is all of this range is pretty much, it's set at 38 every week. So not much has changed this week other than the median list price is continuing to climb. That's Dallas County, and that's normal for this time of year. Things should be heating up and climbing for the next few months. Then same thing, looking at Collin County. Collin County's Market Action Index actually jumped right back up to where it was 2 weeks ago. But remember, Collin County is only at 36. So even though it looks like it's remaining at the top of its range, Dallas is at 38, Collin County is only at 36. But their median list price as well is at the very top of their range. It went up by a few $100s to $550,000. Median price of new listings though, $575. That is the highest it's been all year. So it broke out the top of the range. Their average days on market as well dropped by 3 days down to 77. Their median had another drop all the way down to 35. I don't know why these side numbers haven't updated yet, but you can see when I scroll over, it went from 42 all the way down to 35. That's a big drop. And then their inventory as well, nice steady increase. All of that is normal this time of year, and their Market Action Index, like I said, came up a little bit, unlike Dallas. So both of these markets looking totally normal. They do look like they're heating up, which is what should be happening this time of year. Now, very quickly, I wanted to show you the pending sales because look at Dallas County's pending sales. Last week, we were below where we were last year. We were only to 1,969, and then we went completely vertical this week up to 2,153. So we have been, since March 28th, we've actually been below last year's pending numbers, and then this week we shot back out through the top. And then Collin County, as we've already discussed, they have just been blowing last year out of the water. They are the #2 fastest growing county in the entire country. But look, the peak of last year, we only had 1,900 homes under contract. That was the very highest we got. And we are already at 2,036 this week. So we are well above the peak of last year, and you can expect this to continue going up. until, let's see, that was May 17th of last year. So pending sales growing in both Dallas and Collin counties. Now let's move on to the hottest and coolest cities and zip codes in all of Dallas and Collin County. These are ranked using that same market action index number we just looked at. This week we have a new hottest city, and that is Coppell, Texas, moves up to number 1. It heats up 1 spot. Grapevine, which was number 1 last week, cools off 1. Louisville heats up 1. Carrollton cools off 1. Plano and Richardson remain in their spots. Saxe heats up 2. Grand Prairie cools off 1. Allen cools off 1, and Irving jumps onto the list at number 10. And Lancaster, which was number 9 last week, cooled off the list. Then we like to zoom into specific zip codes. The absolute hottest is Plano, 75093 at a 51.73. Then Grand Prairie, 75052. Coppell, 75019. Grapevine, 76051. Carrollton, 75007. Carrollton, 75006. Louisville, 75067. Plano, 75023. Plano 75075, and Plano 75025. So if you've got a home in one of these zip codes, you should be able to sell for top dollar. Then looking at the coolest cities, Blue Ridge, Texas has been for the longest time and remains the coolest city in all of Dallas and Collin County at a 26.09. And this week it's actually the only buyer's market. Remember, 30 or below is a buyer's market. So it's the only city left that's a buyer's market right now. And then Rockwall cools off 3 spots to take number 2. Salina cools off 1. Van Alstyne heats up 1. Sunnyvale heats up 3. Nevada cools off 2. Royce City remains. Leonard jumps onto the list at number 8. Farmersville heats up 3. Prosper heats up 1. And then Melissa, which was the hottest last week, heated up off the list this week. Remember, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that's in the description below. Thank you for watching. I'll see you in the next video.